As a trader, you want to be able to have the edge so that you can stay in the game, be profitable for the long term. Now, you're looking at my chart. This is the E-mini chart of April 26th. And the market opened right about over here. And I just want to explain what you're looking at on my chart. You're looking at the Taylor trading zone. It's a calculated number. You're looking at the previous day's close right here. And you're looking at the stochastics. And these are the three tools that I use in conjunction with 6 trade setups that I teach in my course to tell me where the market is likely to go and when. Now, to be consistent, you really want to be able to read the future. And of course, nobody can read the future. So using the tools and the experience of knowing how to use them, you can get a sense of where the market is going to go at certain points during the day. Certainly not every day and certainly not all the time. But here on April 26th, the market opened right about over here at 40.99, 4100, and quickly closed the gap and bottomed out at the calculated trading zone support level. Then they went, closed the gap again, hit that target. Again, these are targets. Target lines and range for the day is important. And the target lines for the day were the previous day's close and the trading zone support and resistance, okay? Support and resistance and the range. Now, how do you use these tools? Now, again, you have to be able to look at it at certain points of the day. Some tools are going to give you insightful information. Some are going to be meaningless. But here, during the day, prices did close the gap down at 40.92 and then went down to the bottom of the trading zone at support at 40.86. Then went up somewhere in the middle of the trading zone. Where did they go? They went right up here at 41.08. But strange thing happened. 41.08. You see this? 41.08, 41.09 became the intraday high. The intraday high. This was the intraday low down here at 40.82. And the trading zone is particularly useful at knowing the range if you know the intraday high or low. Now the intraday low was down here. So if I move the trading zone down to the intraday low, I'm going to copy it. I'm going to create a copy of the trading zone. Here I'm going to move it down to the intraday low. And according to this, prices should trade up here at 41.24. But they actually put in an intraday high at 41.09. So moving the trading zone down to 41.09 to a top gave me a support level for the range of 40.68, which is where they ultimately traded. Now, this was a little bit unusual because the intraday high or low is generally put in the first half hour to hour of the day. And here, the intraday high was put in at after 12 o'clock. This certainly, the low that was put in at 10:30 was not the intraday low because prices traded lower. But nevertheless, this is how you use these tools. And so let's go over to the next day, April 27th. And I have, again, my chart set up with the previous day's close down here at 40.74 and the trading zone support at 40.55, resistance at 40.97. And where did the prices go? Well, the prices opened right here at over the calculated resistance level. So, of course, the trading zone was useless in terms of being a tool to give me some indication of where the market is going to go, but not really. This was an even easier day for me in terms of trading because the intraday low was, apparently it was here, but you don't really know until it gets tested. And it did so right here at 11 o'clock. That gave me the indication of where the market was likely to trade. And again, I'm going to take my trading zone and transpose it, move it up to the intraday low, which happened to be right at the open over here. And that gave me the information of where the prices were likely to trade or end up the day, which was right over here at 41.38. The fact that they went higher is immaterial. I mean, we don't want to guess, or we want to eliminate the guesswork as much as possible. Let's go over to the next day, Friday, April 28th. And Friday, April 28th, again, interesting day. The market opened right over here at 41.44, hit the top of the trading zone at resistance. Instead of bouncing off resistance, they broke through resistance and basically went up to 41.75. I had no reason to trade this. Of course, they went up and they went back down, hit the trading zone resistance level again, which became support. So, that gave me the indication of where prices were going to trade for the day. So I take my trading zone and I'm going to move it to the intraday low. Okay, prices opened over here. This gave me the indication that prices were going to trade somewhere up here for the day, which they did. So that's how you trade, that's how you use your tools, and that's how you give yourself the edge. If you want to use the trading zone in your trading, and you can use it for any market you trade, I use it for the E-mini and micro E-mini, but you can use it for any market. I make it available at timelessdollar.com as a calculator. That's right, you can calculate the trading zone for any market yourself. Download it at timelessdollar.com. You're going to want to shoot for two goals as a trader. The first, of course, is profitability. The second is consistency. Without consistency, you're not going to be able to stay in the game. Whether you make money or you lose money is a result of your trading metrics. So what do I mean when I talk about trade metrics? This spreadsheet gives you an example of the information, the metrics that you need to keep track of in order to become a consistent trader. The two metrics that are particularly important that you're going to want to improve your performance on are represented in this spreadsheet right here. The number of winners per day, the percentage, and you want to keep this around 70% if you can, and the cumulative average income or loss per trade over time. Keeping these metrics takes a little bit of arithmetic, and you need to do it at the end of your trading session each day. This spreadsheet provides the metric calculations in an automated format. We enter the date. Let's say we make 7 trades, and 4 of them are winners, and on those 4 winners, I earn $300. The percentage of winners and the number of losers and the percentage of losers are calculated automatically. I also enter the amount of money I lost on my 3 losers. I lost $125, okay? So entering that, the spreadsheet automatically calculates the other metrics in order to automate the entire process. Everything on this sheet is what you need and what will tell you whether or not you can become a consistent trader and will help you improve your metrics. And again, the most important critical metrics are the percentage of winning trades and the cumulative average per trade. When I say cumulative, I mean over time. Anyone can make money one day, 2 days, but over time is the key. I created this spreadsheet and it's automated, and all you need to do is enter in the white columns the total number of trades for the day, the number of winners, the total profit, you enter the loss, and everything else is calculated automatically. I've made this spreadsheet available for you to download. If you'd like to have it, it's only $10, and you can keep these trading metrics very easily without undue arithmetic on your part. You can find a link to purchase this spreadsheet at my site at timelessdollar.com.